Good morning or good afternoon, depending where you are in the world, and welcome to the EIC Opportunities in Libya webinar, which we are delighted to bring to you in collaboration with Bank ABC. For those of you that don't know me, my name is Ryan McPherson. I'm the Regional Director for the Energy Industries Council, looking after Middle East, Africa and CIS. And it's a real pleasure to be here today and give you an update about what's happening across the Libya market. So before I start, and I'll bring up the agenda, I just wanted to let you know a little bit of housekeeping. Everyone on today's call is in a listen-only mode, so it'll only be the speakers that can actually have their audio accessed. However, we have got an active Q&A session towards the end where we would encourage you to put some questions in. So please put them into the chat function, which is fairly easy to see. You can just put that in at any point in time as well. So please don't leave it right until the end. If you have any questions, get them in, and I will do my best to ask them on your behalf. So please carry on and put them through. So let's take a look at the agenda for today. We've got a fairly packed program with quite a lot of speakers. We'll get a real overview, and you will get a large percentage of these presentations sent through to you afterwards. So we're going to kick off with my colleague Aisha, who will give you an overview of the Libya energy market taken from our proprietary databases, data stream and supply map. And also we will hear from Mohammed Zalmati, Managing Director at Allard Energy, talking about the current bid round and how that is going. Ehab Muhktar, the CEO of PetroGas Libya, will give us an update from their perspective, and we'll be delighted to hear from today's sponsor, Gas Atega from Bank ABC, the head of Libya business coverage. And we'll also be delighted to be joined by Peter Millett from the Libyan British Business Council, who will give us an update on what's happening from their side. We will conclude with that panel session, and that's your opportunity to get some questions in to all of today's speakers, and we'll make sure that we close up promptly on the half hour so that you've got the rest of the day there. So without further ado, let me bring up our first speaker. It's a real pleasure to have Aisha with us. Hi Aisha, how are you today?
Hello. Hi Ryan, I'm good. How are you?
I'm very well, thank you. I'm very well. Thank you for preparing today's presentation. We really appreciate it. I think this is one of the first ones you've delivered on behalf of EIC.
Yeah, this is actually my first market presentation, so I'm really excited about it.
Well,
excited to share about the market. Yes.
And we look forward to hearing what you've got to say. So I will pass over to yourself, Aisha, yes. And we look forward to hearing and seeing your presentation.
All right. Okay, thank you so much, Ryan. Thank you all for coming to the webinar today. So I'm Aisha Sarjuni. I'm an energy analyst for the Middle East and North African region, and I specialize in non-GCC countries. So today we'll be diving into Libya's expanding energy sector and explore how the country's oil and gas sector is fueling its journey towards a more sustainable future. Next. All right, so this is the overall market overview up to Q3 2025 for Libya. As you can see on the top left of the slide, we are expecting about 27 projects to come online by 2032, and the total capex reaching about 26 billion. The left bar chart shows an overview of projects under development in Libya up to 2032. And our data currently shows that Libya's current priorities are towards stabilizing its fuel and power sources. The International Monetary Fund, IMF, reports that over 95% of the government revenue comes from the oil and gas sector. So this just proves how pivotal this sector is to Libya's growing economy. On the right, we can see that the upstream sector alone holds over 50% of the estimated capex, followed by the conventional power sector at 20%. While Libya is expanding its gas-fired power capacity, we're seeing progress towards energy diversification, with over 16% of the overall capex invested in upcoming solar plants. Next. Moving on to the oil and gas sector, Currently, the EIC data stream tracks about 17 oil and gas projects expected to come online by 2032, reaching over 16 billion USD of total estimated capex. In the left bar chart, 14% of these investments are allocated for the upstream projects, followed by 2.6% and 0.65% for downstream and midstream projects, respectively. Now, majority of Libya's developing oil and gas projects are early developments near the western and southwestern onshore fields. And the government is aiming to attract foreign investments through crude oil exports, and they are targeting up to 2 million barrels per day of oil production by 2028. This will be executed progressively, starting with 1.6 million barrels per day by 2025, which was the country's production rate before the civil war back in 2011. And as of August 2025, the production rate has reached over 1.38 million barrels per day. Besides the upcoming bid round, some of the key fields supporting this target are the redevelopment of Sarir and Mesla oil fields by BP, which are currently producing over 98,000 barrels per day in total, as well as Area 47 in North Hamada field by Nafusah oil operations, and is expected to contribute about 50,000 barrels per day. So Europe is a significant export market where there is high demand for Russian crude alternatives, with Italy as the biggest purchaser, followed by France and China. And right now, the NOC is waiting the approval of 3 billion USD budget to support the oil production boost and develop state-owned oil companies. Touching further on the oil and gas targets, we are also expecting more modernization projects in the coming years to support the increased production rate. The government has allocated 17 billion USD for infrastructure modernization and expansion to create a favorable investment climate for international energy companies. And even though Libya is a major crude exporter, the capacity of its domestic refineries is currently limited and unable to meet local demands. Most of its refined petrochemical products are actually imported, mainly from Italy, Turkey, China, and Greece. 3.7 billion USD has been allocated for fuel imports in 2025, but it was still not enough to meet the required demands, which was actually double at 7 billion USD. Therefore, the government is also aiming to upgrade its oil and gas processing facilities with ongoing refurbishments at the Azawiyah oil refinery, Melita oil onshore gas complex, as well as a new oil refinery in Ubari. These downstream facilities are expected to be completed by early 2030s. Additionally, the government has also highlighted intentions to develop its petrochemicals and polymer sector to diversify its national income. On the bottom right, we can see that NE is leading the Libyan oil and gas market with 8 billion USD of projected capex, followed by state-owned oil entities such as WOC, ARC, and Melita Oil and Gas. But recently, we've been seeing some comeback from US-based companies into the Libyan oil and gas market with recent deals and government negotiations. So US-based players have largely been absent from the Libyan territories for over a decade due to past geopolitical tensions. And in the past 2 months, multiple deals were signed with ExxonMobil, Hill International to develop offshore fields in Libya. Besides that, Libyan officials have also discussed potential investment opportunities with Chevron. Next. All right. So what we are seeing right now is the projects of interest in the oil and gas sector on the left side of the slide. For the upstream sector, we have the Waha concessions. So it's a 2 billion USD project, and it's jointly developed by Waha Oil Company, a joint venture between NOC, ConocoPhillips, Hess, NE, and Total Energies. So this project is expected to produce 200 million cubic feet of gas per day and 100,000 barrels of oil per day from the North Yellow field. It's still in the conceptual design phase and estimated to complete by 2030. Next is the refurbishment of the Ras Lanuf crude storage terminal. So this terminal has suffered up to 60% damage from past political attacks, and its operator is aiming to restore and increase the terminal crude export to accommodate for future export targets. So the project is still in tendering and bidding stage, with the EPC contract yet to be awarded. Lastly, we have the Azawiya refinery upgrade and expansion project. So ARC is doubling the refinery's capacity from 120,000 barrels per day to 240,000 barrels per day. This project will include the addition of new refining and cracking units, and it's still in the pre-FEED stage, with Honeywell just recently completed its feasibility study back in August 2025. And lastly, the highlight of the oil and gas sector for this year is the Libya bid round. This bidding round was announced almost 2 decades since its last bid round in 2007. The bid round offers 22 onshore and offshore blocks, and over 37 international companies have expressed interest in the bidding round. So notable players include Eni, Total Energies, and Chevron. And the results of the winning bidders will be announced by the end of 2025 or early 2026. Next. So moving on to the conventional power and mature renewables sector. As of 2025, the General Electricity Company of Libya, GECOL, has projected that the peak electricity load will increase to 21.7 gigawatt by 2030. And based on the EIC data stream, we're seeing about 4.3 gigawatt of solar power capacity and 5.3 gigawatt of gas-fired power capacity to be added by 2030. So most of the developing gas-fired power projects in Libya are expansion plants, such as the Tripoli and North Benghazi gas power plants. But at the same time, in an interesting twist, we're seeing that Libya is aiming to utilize solar energy as a strategic move towards reducing costly fuel imports and also freeing up more of its valuable oil and gas resources for export. Libya has immense renewable energy potential, with an average of 3,200 sunshine hours annually and solar irradiation levels of 6 kilowatt hours per meter square per day. On the right side is a table of key drivers that enable the progress of renewable energy in Libya. Because of its solar power capacity, the government has allocated a staggering $10 billion USD fund to generate up to 4 gigawatt worth of solar power projects by 2035. And part of this investment will be allocated for grid modernization to make way for upcoming renewable capacity. The strategy will be implemented in 3 phases, starting with 1.7 gigawatt by 2027, 2.5 gigawatt by 2030, and the full 4 gigawatt target by 2035. And as seen from our track data, obviously Libya is already reaching beyond its targeted solar capacity if the projects do proceed as scheduled. And now that begs the question, are the expectations meeting reality? Currently, only 300 megawatt of the total capacity have advanced through the EPC stage, with the remaining large-scale projects are still in feasibility phase. The government has also announced the Guarantee Fund, which was released via the Ministerial Decree 830 in 2024. Even though it's actually targeted to support Libya's economy as a whole, the government has prioritized this fund for its renewable sector. This financial mechanism will be providing additional security for foreign investors against potential political and commercial risk. The EU is also funding about 4.9 million USD through the Support to Energy and Climate Change Mitigation in Libya initiative by UNDP. So this fund will be providing technical and institutional support towards more sustainable, diversified, and low carbon future. They are allocating about 2.2 million USD for energy transition projects and 2.7 million USD for climate change mitigations. Lastly, Turkey has actually emerged as a key partner for Libya's growing power and renewable sector. So both governments have finalized an MOU back in January 2025 to enhance cooperation in gas power, solar, and potential wind projects. Turkey's ENCA and Salik Energy has actually played an integral role in Libya's modernization initiatives for its gas power plant expansions in Tripoli and Benghazi. This also indicates potential investment opportunities in Libya's undeveloped wind energy potential. Libya's wind energy resources are promising, with average speeds reaching 6 to 7.7 meter per second at 40 meter above ground level. Next. Here we have listed down the list of potential opportunities in upcoming solar projects, because currently Libya's gas-fired power plants have already advanced through the EPC stage, and they are mostly just modernization projects. So the first project is a 2 gigawatt solar PV plant by UAE's W Solar Investment Group. So this company is a key player in Libya's solar sector with 3.5 gigawatt capacity in its pipeline. The first phase of the project will have 500 megawatt capacity, and the project will be built under a BOO basis and operated for 25 years. And then next is a 1.5 gigawatt Eastern Libya solar project by GECOL. It's a $2 billion USD project, which is jointly developed by EDF Energy and Power China. It is still remaining in the feasibility stage. Lastly, we have the Al Sadada solar PV plant by Total Energies. It will be equipped with 1.2 million solar panels, and the project's feasibility studies were recently completed in March 2025, and the required approvals are expected to be secured by end of 2025. Next. So now let's talk about the energy transition and hurdles in terms of Libya's decarbonization initiatives. In terms of energy transition, Libya's energy transition sector is largely still in infancy stage, because as its basic energy infrastructure develops, we can expect a slower growth of this sector. Despite that, the country is still showing positive progress towards decarbonization, following a recent MOU signed between Libya's Ministry of Electricity and Renewable Energy with Germany's H2 Global in August 2025. So this partnership will be utilizing Libya's vast solar and wind capacity to produce 1 metric ton per annum of green hydrogen for export to EU, primarily Germany. Currently, Libya only has one carbon capture project, which was built as part of the Sabrata gas project A&E Structures Integrated Field Development Project. It will be capturing approximately 2 metric ton per annum of carbon dioxide and will be stored in the retiring Bar es Salam offshore gas field. In terms of the decarbonization hurdles, given the country's stabilizing economy, Libya has shown a considerable progress in its decarbonization initiatives and fundings. However, there's no denying that both the renewables and energy transition sectors are largely limited by lack of clear governance and supporting infrastructures. First of all, the country has yet to draft a clear regulation for both the renewables and energy transition sectors. Investors are required to follow the Investment Law Number 9, 2010, which is a very general framework that does not provide clear rules for the renewable sector's unique provisions. Next, due to the absence of feed-in tariffs, investors are relying on long-term power purchase agreements, PPAs. And even though this is very common, it's a very common practice, but pairing this system with the lack of dedicated frameworks will risk investors' security from potential policy changes and payment defaults that may affect the project bankability. Lastly, insufficient infrastructure. The country also suffers from aging and damaged grid infrastructures from past geopolitical conflicts. Significant investments are needed to ensure that the grid can support widespread renewable deployment. Finally, water scarcity is a critical concern in Libya, especially as the government is considering of investing in green hydrogen export. There are ongoing desalination projects in both eastern and western Libya. but challenges persist in maintaining the balance between agriculture, energy, and domestic use. Next. Overall, the Libyan energy market shows vast potential as the government persists with strategic planning amidst its current economic and political climate. Some of the key takeaways are that the oil and gas sector plays an integral role towards rebuilding Libya's economy and energy infrastructure. This sector is especially critical in providing the additional investments needed to modernize existing facilities and grids, both of which are backbones to its developing economy and energy sector. Secondly, although Libya's renewables and energy transition sectors remain in early stages, funding initiatives and commitments for investor security suggest clear direction towards decarbonization. And lastly, the success of its energy sector depends on its ability to establish clear institutional frameworks and regulation to attract international capital and expertise needed to transform its energy landscape. Next. And that marks the end of my presentation, and I hope it has provided sufficient insight towards the Libyan energy market. Thank you.
Aisha, tremendous job. Well done for your first presentation. That was absolutely outstanding. So well done. You're going to join us for the Q&A towards the end. I know we've already got some questions coming in, which is fantastic to see. So hopefully we'll get more coming in for that effect. If we could just welcome now up our next speaker to the panel here. So I think our next speaker, we're delighted to welcome up Mohammed Zalmati, Managing Director from Allard Energy. Hi Mohammed, it's nice to see you again. It was just over a year ago or so that we met up in person, but I trust that all is well and we look forward to your presentation.
Thank you, Ryan. All good, yeah. Nice to see you too.
Good, the floor is yours.
Hello, everyone. As mentioned, I am Mohammed Zalmati, and I am the Managing Director of Allard Energy. Today, I'll give you a brief overview of Libya's ongoing bid round, why it matters, who's involved, and how you can position yourself, especially that many of you are involved in the oil and gas supply chain. Next. So, as you know, Libya has a long history in oil and gas, and over the years, the way contracts were structured has changed. As you can see, the concession agreement, it started in 1955, which is basically, that's where the Libyan petroleum law has been introduced, law number 25. Then in the 1970s, there was a shift to participation agreement. And after that came out 4 different generations of EPSAs, which are commonly known as exploration and production sharing agreement. And now we've arrived to what we call the PSA, or the production sharing agreement. Now each of these shifts tells a story about the time. Take the participation agreement in the 70s. It was essentially a form of nationalization, which is at that time, it was driven mainly by new political realities. And later on, between the, or among the 4 EPSAs, EPSA 4 has commonly been criticized as the most, or the toughest form of EPSA. And basically it reflected similar timing. At that time when it was introduced in 2005, oil prices were high, global demand was strong. All that gave Libya the leverage to push for much tougher fiscal terms. Now, on the other hand, the PSA, which is now ongoing, it reflects a much more relaxed fiscal terms, much more convenient, I would say, investment climate for investors, either previous investors or newcomers who came to participate in this PSA. Therefore, it is designed to be far more attractive in general compared to not only the previous Libyan contractual form, but also compared with what we have globally. And during the roadshow, the team from NOC, they've showed like how the current PSA is competing with neighboring countries and their contractual forms. Next. So as you can see here, we got the 22 blocks, as mentioned previously by Aisha, that we have 11 onshore and 11 offshore. Interestingly, if you can look at this table, there are 8 blocks that have already discoveries and just waiting to be developed. Now, under the old EPSA systems, those kinds of discoveries would usually be what is called ring-fenced. Basically, they will be taken out of the deal. So you get the block, but that specific area where you have the discovery is not part of that deal. Now, in the new PSA, this has changed, reflecting a big shift in the approach. And as I said before, it makes sense, and it makes these opportunities much more attractive to the incoming investors. Next, please. Now let's look at who's participating. When we look at the qualified bidders here, there are 29 companies approved as operators and another 8 as investors. What really stands out here is the mix. It's not just the major IOCs, the big names that you already know, but there are also some independent company. And this is not new for Libya. Even back in the days in the concession agreement, companies like Occidental, which I really hope that they participate in this bid round, but they didn't show up. At that time, it was, I would say, a small independent company in their early stages. And Libya oil and gas business has significantly impacted the history, or the later on milestone that that led to Oxy became what's Oxy today. So for the supply chain companies, and of course also it's worth mentioning there are few NOCs here, Pakistani, Algeria, Polish. So NOC are becoming more influential companies. They go abroad, they do invest. It's not just IOCs anymore, but NOCs are expanding as well, and we can see them here. So for those of you, the supply chain companies, this means a wide pool of potential customers to work with. And the key is understanding who's bidding, what they need, and where you can fit in your product offering. And as we go through the timeline, which I will show you on the next slide, the picture will be clearer on how to plan your next steps. Next, please. So this is the revised timeline. As mentioned by Aisha, the previous timeline, it was supposed to be by end of 2025. Everything is done. I mean, winners announced, and the bid round is over, but it has been amended. And just last week, NOC updated this timeline, and they shared it with all the participants, and it's moving fast. As you can see, the virtual data room, where companies have access to the subsurface data, so they can work with to make their technical analysis, and accordingly they will do their economic analysis. The data room will be closing in just 2 days. After that, bidders will have until February 11, 2026 to prepare and submit their offers. And on the same day, bids will be opened and winners will be announced. So perhaps, again, for supply chain companies interested in the Libyan market, they need to get ready, make good use of this timeline. Next, please. So before closing, let me briefly share with you what we do at Alara Energy. Basically, these are the traditional, I would say, obviously we are a typical subsurface advisory firm. But let me tell you how we managed to differentiate ourselves and secure some contract with some of the participating companies in this bid round. First, we leveraged Libya's rich oil and gas heritage with a team that has developed its expertise along major IOCs or even within the NOC and with some major oil field service companies. And as you know, Libyan oil and gas professionals are well established within the industry. And more importantly, our local and technical knowledge has enabled us to deliver preliminary evaluations for those blocks even before accessing the data room, which was just based on previous experiences. Secondly, which is indirect value that our customers manage to harness through partnering with us, is that we're delivering to them value beyond our core subsurface services. We have supported our client from the very start, helping them with their early business development. We've managed to facilitate some of the most important meeting with the ministry, with the NOC. And as you know, Libya is a highly dynamic market. Therefore, you need to have some sort of an agile, reactive strategy on how to approach it. So having local partners who can give you advice on how to navigate this, I would say, from an external point of view, they will look at it as complexity, but for us, it's the norm. We get used to it, we adapt, we know how to approach it, we know how to tackle different challenges. Next, please. So yeah, and if you're wondering about this photo, I would say that's another reason for you to visit Libya. Thank you.
The photo from Mohammed?
That's one of the main three Roman ruins that are in Libya: Sabrata, Shahat, and Leptis. Exactly. It's magnificent. And there's one more thing I'd like to say. In Tripoli, there is the famous arch of Marcus Aurelius. Many people, they don't know maybe Marcus Aurelius, but probably everyone has watched Gladiator. It's the emperor that who dies at the very beginning of the movie. So again, if you come there, you will see his arc.
You're doing your bit for the tourism authority as well as the energy sector in Libya. Thank you, yeah. Mohammed. Also, you're going to join us for the Q&A, so thank you very much for that. Really appreciate the presentation. We'll keep things going because I think it's great to have this level of local knowledge that really is just outstanding for hopefully all of you on the call. And our next speaker up, we're delighted to have the CEO from PetroGas Libya, Ehab Muhktar. Ehab, I'm hoping you're with us here. It's great to see you again. Like Mohammed, we'd met before just over a year ago, so I trust that all is well in the interim, and we look forward to the presentation.
Hey guys, nice to be with you again, Ryan, and a pleasure to be around your fellow speakers as well today to give a chance to discuss Libya and the potential and how to navigate it. So I'll try to give a more of a business perspective on an outlook, considering the guests that you have that are listening in today.
Perfect. Well, we look forward to that, and thanks as always for supporting. So I'll now take myself out, and the floor is yours.
Great, thank you. So guys, as you've heard from our two fellow speakers, obviously you've got a great overall general view of what Libya is and where it is today and the potential that it has, but obviously just clearly looking at it as a general, it's a country of great potential, both from oil perspective, gas perspective, and also as we're tapping into in recent years, following the global trend, which is also the renewables. So as one of the key matters for me and in terms of metrics to measuring where we are today, and when I last met with Ryan and even Mohammed at the EIC summit, is we always focused on production levels and what's happening with Libya in terms of volatility. I'm pleased to say that up until now, there's obviously some disruptions because of, as mentioned, the infrastructure challenges that we have to deal with, but the average production has been above 1.2 and is anywhere floating between 1.3, 1.4. And the NOC is diverting a lot of its capital and resources to make sure that that level is maintained so that they can obviously leverage it for the Libya bid round and the potential projects at hand. Next slide, please. So I wanted to focus a little bit firsthand in terms of on the Libya bid round. It's the NOC's vision for achieving 2 million barrels and basically complementing on what it already has in terms of the infrastructure. So in that regard, I think it's important to kind of understand what the NOC's vision is for prospective investors and companies looking into them, and how does that relate to everyday projects that we're working on. So from our perspective, this aligns in terms of, as a business, where do you need to focus? Where are resources being allocated? And in that regards, then how do you go about meeting with these customers, discussing with the NOC, and then the realization of what's put on paper to basically how that project is realized. Here at PetroGas, we've been in this market since 2005, and we've developed a wide range of strategies, but the predominant factor for anyone that wants to come into Libya to take part and engage and be successful in the country, I think it's definitely a form of needing some patience, but also needing having the technical capabilities, and also, most importantly for me, is the adaptability to the country dynamics by aligning yourself either with customers that really need your technology and products, but also in terms of utilizing the local know-how, the local expertise. And in all fairness, because the NOC has actually made quite a few efforts in recent years to be at the major events, to also take the Libya bid round across the major capitals to promote what's happening in the market, it's a better opportunity than it has been before in terms of having access to the Libya market. Next slide, please. So as an oil services company here, predominantly, I think one of the factors that needs to be focused on, and that you can see from this map, is the infrastructure. As you know, Libya, as Mohammed's pointed out, has been operating since 1955. And a lot of that infrastructure was built to actually manage a capacity of what was the maximum back in the 70s of 3 million barrels. As a result of obviously the challenges that it's faced over the years, Libya has not had a great opportunity to develop that on, should we say, a regular and optimum basis. So that leaves, for me, as in terms from a business perspective, a lot of opportunities to for companies to bring in their technologies, their know-how, their capabilities to leverage technology, as we are trying to do as a technology service provider, whether it's in power generation, whether it's in the upgrade of pipelines, whether it's even in the inspection and testing services. And as well as, most importantly, actually, is the training of the oil and gas customers, bringing them up to the latest and most implemented standards that can be used across the oil and gas sector. The benefit of Libya is that you have onshore and offshore services that you could provide, because we have obviously offshore platforms in the west of Libya, and then you have a number of refineries as well that are in major need of rehabilitation, upgrading. And of course, as Mohammed mentioned, there's a whole bunch of subsurface services, as well as existing operators also look at secondary and tertiary fields and how to optimize that production, so that the NOC has all the tools that it has at its desk to be able to kind of utilize and reach that 2 million barrels target. Next slide, please. So again, I'm trying to give a business perspective about who we are as a company. As you can see, we're very technology focused. We believe that through technology, it's how Libya's oil and gas sector and energy market is able to broaden and enhance its capabilities. And by also doing that, it also encourages companies to reach a form of international standards. So a lot of the oil and gas fields are actually operate independently outside of the energy grid. So as a result of that, there's a lot of power generation capabilities, where from gas turbines to diesel generators to electric compressors. You also have obviously the need for a lot of pumps and valves. So there's a considerable areas and fields of expertise where UK businesses can apply their specialities, particularly in areas, again, because you're looking at production, is in terms of how is that data collected, how is it used, how is it then passed on to management to make the right kind of decisions as to where to apply the allocation of the budget and resources. And we work quite closely with the customers to actually, in terms of not only as a company representing international businesses, but we also look at it as Libyans to try and actually say, maybe this isn't the best project to focus on based on the data that we're receiving from your machines, or from, for example, from studying how the gas flow rates are, what kind of gas is being produced and how it's being used. Another aspect that we're certainly looking at these days, and we've even held some events in Tripoli about, is decarbonization and meeting the NOC's objective of net zero flaring. It's an optimistic aim that they've looked to set for themselves, but as a company based here, and we've sat with a number of companies and made some presentations about the technologies that are available and how to utilize that gas flaring. We see a great opportunity for even companies to go out there and actually go to the fields and perform just the initial pre-feed and engineering studies to actually collect the right data. So at the moment, across what we've known, the spread, people kind of know how much approximately they're producing, but where exactly it's being flared, how it's being flared, what's the gas composition, and so on. These are all interesting areas that need to be further developed, and through actually a complementary set of technologies to be able for the NOC to then decide how each field can then utilize those scuffs that are currently being burned. The other aspects for Libya probably to take into account that we've certainly noticed as a result of the net zero ambitions is that the global demand and regulations are changing, and Libya has a lot of obviously international companies that operate these fields either independently or through the NOC in a joint venture or production sharing agreement. And they have an impetus to actually invest in these areas, as highlighted by our first speaker, through projects such as with ENI. But the NOC itself is actually looking and studying with the IOCs and through its wholly state-owned companies, how to actually better utilize that. So there's a number of our opportunities there. We have all Libyan expertise here at PetroGas as well, people that have worked across different regions before coming to Libya, that are applying these methodologies and studying with our customers how to best implement that. Finally, just to kind of touch upon, I think, an important area that's maybe is not being covered so much in aspects is how safe is Libya in terms of traveling to and from, also in terms of how we manage for our field service engineers and our business development managers and our international guests in terms of coming into country, moving around the different fields. And I'd like to point out that, again, there's a number of IOCs, most of them are European, some even British companies, come here and they sit with the clients and discuss the security and safety aspects before even traveling to the fields. So in terms of coming into whether you're Tripoli or whether you're coming into Benghazi, there's a whole number of even local companies now established and usually partnered with international companies that can organize the logistics for you, that can sort out the accommodation, certainly the visa process and what we call the desert pass process, the permits that are required to enter the oil and gas fields has been simplified and it's a much smoother process than before. I'm not going to hide that there isn't a level of bureaucracy involved, but through these kinds of engagements that EIC is presenting and through establishments and organizations like the LBBC, you'll be able to be put in touch with the right people, the right companies, and even in terms of doing business from the banking perspective, which I know can be something, or a financial perspective, we can discuss that and assist interested parties in terms of how to manage that in a transparent and compliant way that meets both international standards and what's required in Libya as well. That's it. Thank you.
Thank you very much, Ehab. Great point as well that you raised there in respect of the security. I think that's probably on a lot of people's mind there. So thank you for addressing that head on as well. And you'll join us as well for the Q&A towards the end. So thank you for the insights.
Thank you, Ryan.
I'd now like to welcome up our next speaker from our partner today, Bank ABC, Ghassan Atiga, the head of the Libya business coverage. So Ghassan, welcome. Thank you for joining us, and more importantly, thank you for partnering up with us on today's webinar.
Thank you. My privilege, and it takes us pleasure to participate and to take partnership with you.
Perfect. So I will now hand over to yourself. Yep, there we go. We can see you on the screen. So, and you're also going to join us as part of the Q&A as well. So I think many people will be interested in a few questions coming in. So I'll hand over to yourself, Ghassan, and the floor is yours.
Thank you. Thank you, everyone. And I'm very pleased to attend this conference, or let's say webinar, to be very precise. I'm also thankful to Aisha and how she managed to eloquently set the map on the landscape of the Libyan energy in totality, including the traditional oil and gas industries. Another very important sector, the electricity generation, and the next one, the future one, which is related to the renewables, and that I would put into that category also the other industries related to the capturing of gas, and also the deflaring industries, which is quite important in order to support the efficiency of the oil and gas industry in general to meet the requirements of the world today. In order to give you a general background, let me start with myself as a general introduction. Later, I will give a general background about Bank ABC, the products, and also our outreach, and then our relevance to the Libyan energy sector, and also in particular two sectors, in the oil and gas, and also with the energy, for those who are interested in the other two areas, the electricity generation and the renewables. Let me start with myself before moving to the next slide. So my name is Ghassan Ataiga. I am the head of the Libyan business coverage in Europe, and my role here also includes acting with privilege as the global head of a global relationship of the National Oil Corporation, with an oversight of the Libyan oil and Libyan gas business throughout our network from New York to Singapore. Can we move to the next slide, please? So in that point, I mean, to give it just a perspective of bank, we started our operations in 1980, and that from our headquarters in Bahrain. And today we have expanded around direct presence in 15 countries. And we have a direct relationships with around 165 banks, including around 22 banks in Libya. With Libya, we have close partnership with main key players in the banking sector, including the Central Bank of Libya, the Central Bank of Libya, the Libyan Foreign Bank, their subsidiaries abroad, and also the local banks. With these dynamics that we have established over the years, we managed to also get closer understanding and offering tailor-made solutions for the Libyan sector. And that which has sustained us from inception to today. From a personal perspective, if some people would wonder why such a banker is sitting here and talking about oil and gas and energy in general, there is a personal story behind it. I have also had the privilege, and that was like almost 3 decades ago, to witness myself how the oil and gas industry working. When I was a student, I had also privileged to work during the summertime in headquarters of certain oil service companies in Tripoli, and also I had the privilege to go to locations like 103A, and I saw how things operate on the ground, from the wells, the work over, seeing all these pipelines on the sand dunes, and you see how this industry works with blood and sweat to keep life flowing in the country. Today, we have, with this wealth of knowledge and understanding of the dynamics of the country, we managed to go further afield, despite all the challenges that the country going through. Next slide, please. This is just a general background on who we are and who owns us in this bank. So the majority of this ownership is dominated by the Libyan state, represented by the Central Bank of Libya. And we have this partnership, partnership with the Kuwait, the state of Kuwait, through the Kuwait Investment Authority. And we have shares that are actually being traded at the Bahrain Stock Exchange. The next slide. This is where I wanted to set the framework in general from a global perspective, what we are offering in general. What is really relevant to us here at this point is what we call it part of the wholesale banking platform, where certain bespoke solutions that we offer to the Libyan market in relation to the particular inquiries that we have. We do offer certain products, some of them related to issuing letters of guarantee for pre-contractual obligations, and then also to support on the post-contractual obligations and secured matters with the available means through our counters, and also through working closely with trusted partners in the financial industry in Libya. These solutions are being tailored bespoke way, and also would offer certain financial support on case by case for certain industries or companies where they fit and bankable. And that, to me, is something that we can offer not only through London, but also through our network in general. So why I'm pleased to hear the platform that Aisha set at the very beginning of the call, but I also heard the message of Muhammad and Ehab. It's very important to have a local partner. Having a local partner with the wealth of knowledge and experience to navigate you through into the Libyan market in general. It's not that easy, right? Despite all what the image shows like in terms of opportunity, but of course, all the matters and details on doing your homework. Doing your homework is actually to do the facts, right? To assess your intent to walk into this market, finding trusting partners, and at the same time making sure like you have the right way and most secure way in order to get paid securely and in good order. Next slide, please. Okay, it's not really great showing up, but this is just wanted to give you a general footprint of where we stand. So where I'm sitting in London, I have this privilege of working closely with the network here, where it's expanding between New York and London. And with this coverage, we have managed to serve the NOC and the subsidiaries, 23 subsidiaries and joint ventures in different locations, namely companies related to Italy, and in particular, I'm giving just example of many like Melita and others on offshore and offshore transactions. The same thing, we apply it with New York and certain transactions, including our support for the latest Melita transactions with Hill International, which has taken some headlines here and there. And also we have a lot of examples where even with the mid-cap companies. So this is, we are not really just focusing on the large size companies, but we are very keen to focus also on the mid-cap and small size companies, because what matters is about building up all the logistics and also the ecosystem that supports the lifeline of Libya. We are aware that this is a lifeline. Almost 95% of the oil receipts are what we get in terms of foreign currency. Despite all the political fragmentation, NOC has shown resilience. Despite all the challenges that we see day to day, continuity, planning, consistency is what has proven at the end of the day. What matters now is actually to build up this optimistic view, trusting local partners, finding the right banking platforms to do the business, and we are here to help. I don't want to go too much into many details. I want to stick to the 10 minutes discussion. I look forward to continue this discussion in the Q&A. Thank you very much, everyone.
Thank you so much, Ghassan. Thank you for the great overview there, and we will continue that discussion just in about 10-15 minutes on the Q&As. Thank you very much. I'd now like to welcome up our final speaker before we go into the Q&A that Ghassan just mentioned there. So we'll get to welcome up Peter Millett, the chairman from the LBBC, the Libyan British Business Council. Welcome, Peter. You've got the pleasure of rounding us out before we do go into the Q&A, but I'm sure you're going to add something additional and probably echo the thoughts of some of your fellow speakers as well. So welcome, and the floor is yours.
Thank you very much, Ryan, and thank you for inviting us onto this this webinar. It's a pleasure to present what the LBBC is doing. I think we have a slide which you can show. You've talked, your previous speakers, Aisha, Ehab, Mohammed, and Ghassan have talked a lot about the opportunities. I'm not going to repeat that because the opportunities are very, very significant and the potential is great. What we do is to try and help open doors with the economic institutions in Libya, with the National Oil Corporation, and also the important point that others have made about finding local partners. So we as LBBC, we have about 140 members, including the major IOCs, oil services companies, but also companies covering other sectors like security, health, education, and so on. We focus a lot on oil and gas, but this slide shows you our main activities. Networking, trying to bring Libyan and British companies together. I've taken 4 delegations to Libya in the last 2 years, to Tripoli, Misrata, and to Benghazi. We helped the NOC in hosting the launch of their bidding round in London in April. We held a major event in July with 2 NOC board members presenting a little bit more about their strategic approach to increasing oil and gas supply and the energy transition. We hosted the cream of Libya's private sector in London last week, including Ehab. It was very nice to see him last week. But that was again bringing Libyan private sector companies together with British private sector companies. In the future, we have a plan for an energy transition event in November, where we will host the chairman of Libya's Renewable Energy Authority, GCOL and NOC here in London. I then am planning to take a delegation of British companies to Libya for the Libya Economic and Energy Summit on the 24th to 26th of January. That's in Tripoli. And then we will do a return visit to the Privatization and Investment Board to Benghazi in April. So those are major delegation plans that we have. We will look forward to working with the EIC in generating interest in those delegations and making all the organizational arrangements. On those delegations, it helps because the visas are provided, but also it opens doors to some of the key partners for UK companies in Libya. The other activities, information, very briefly, we do regular reporting. We have monthly webinars. We've got a webinar next week with a very senior lawyer in Tripoli, talking about legal framework for investing and doing trade in Libya. Advocacy with the Foreign Office, with the embassy. We were instrumental in changing the travel advice from red to amber, particularly for Misrata and Benghazi. Unfortunately, as many British companies might know, the Department of Business and Trade does not support oil and gas industries, but we do, so we can fill that gap. So in short, I think you want to get on to the Q&A. I'm looking forward to working with the EIC, EIC members and so on. The potential is significant. Yes, there are challenges. We can help companies to navigate those challenges. So thank you.
Thank you, Peter. Thank you for the overall, and great to see that you've done so many of the delegations in recent years, and really encouraging. It always seems to be a first step as companies look to dip their toe in a water of perhaps an unknown export market to their business anyway. So I think it's always fantastic to see that. If I could thank all of our speakers, but also welcome them back up on stage. So if I could get Aisha, Mohammed, Ehab, Peter, who's still with us, and Ghassan. And what we've got here, by my reckoning, we've got about 20 minutes for a bit of a Q&A. So I would encourage everyone that's on today's webinar, if you haven't done so, to put some questions in. I'll go through them. Now, we did get one very early in proceedings that hopefully we can bring up here. Now, this, I think, came through during Aisha's presentation, but I think anyone can choose to answer this. I think I know it. I think they're different, but clearly linked. The question was, what was the difference between ENI and Melita? Are they not the same? So I'll open that up. That was our first question that we had.
Hi, Ryan. I'll answer that. Okay, so, well, technically they are the same. Not really the same, but for the audience, for context, Melita Oil and Gas is a 50-50 JV between ENI and also Libya's National Oil Corporation, NOC, while ENI is a separate entity from Italy. So the way we track operators in the EIC data stream, it is highly dependent on the amount of the way the shares are divided between companies in a project and how and what are the roles of each company. So as you see earlier, ENI holds the highest amount of capex as an operator. And a huge amount of this investment is coming from the Sabratha gas project. And in that Sabratha gas project, it is held by 3 entities. So 15% is held by Melita Oil and Gas, 42.15% is held by Eni separately, and another 42.15% is held by BP. So in that context, we are tracking Eni as the operator, which contributes to the graph that everyone has seen just now. So yeah, I hope that answers the question. Yep.
I'm sure it does. Thank you, Aisha. I think it kind of broke through. So there's definitely a linkage, but not quite the same there. Next question, you all kind of covered this in your presentations, and I'll maybe ask you all to give one point on this. A lot of the companies are on today's webinar because they're interested in either expanding their footprint or coming into Libya for the first time. And what would you say is perhaps the key must-know before entering the market? Mohammed, I'll maybe start with you, and we'll go round everyone just to give what would your be one must-know?
Hello. Well, I think the first thing, you need to know the country. Perhaps you can collaborate with organizations like LBBC. Go there and have a visit. If you are an oil and gas operating company, visit one of the exhibitions or the conferences that are related for oil and gas or for energy or for the construction. So without going into much more details, I'll just give you this piece of information. First of all, you need to come and visit the place. And as I said, you can collaborate with the, thank you.
So visit the place. Ehab, what would you add to that? I think we may still have you on mute, Ehab.
Apologies there. In terms in respect to adding to what Mohammed said, I think it's important any responsible organization and company, as Ghassan also mentioned in his presentation, is to, if you receive any inquiries or have something specific, basic maybe equipment or services, to reach out first and ask, so that you understand who the customer is, what they're doing, how they're operating, just general business best practice. If I'm honest, it's not just something that's probably attributable to Libya, but to any new frontier market that you could be chasing for business opportunities. And since our panelists are on here, they've got us to reach out to. You can either connect through Ryan or Peter or any of us, and we'll be more than happy to try and to support and assist.
And I think that is certainly something that I would encourage people to take up on, just given the knowledge that we've just heard here. Ghassan, what would you add to the two comments we've heard already?
No, I'm in total agreement. Just want to add to what I have heard, that obviously first you have to do your homework, understand what do you want to do exactly with your business in relation to Libya, and also to take and do some fact checking. There is perception and there are facts. Sometimes perception appear like facts, but when we do that homework and speak with the right people, then we can find a solution on how to can invest, work, or even to transact, depending on which industry you're after. And I think in this room, there is a wealth of knowledge and understanding to take you through that pathway. Having Peter and having Mohammed and Ehab, and having a bank present here would definitely build up a dialogue where you can lead into a safe and talking about the political situation. I want to allude this from my personal point of view, having worked in Libya with points of divisions in many cases. When I mentioned NOC and I mentioned institutions like Central Bank of Libya, they were dragged into these political drag forces between East and Western Libya. But in reality, that also has added the resilience and the capacity of these institutions to work in fragmented environment and to keep going. This is quite important. That is already being tested with the worst case scenarios in the country. with all the disruptions, all the force measures. These are the risks that, of course, they're still clear and present, albeit they're still lower now. But building up the right mitigant strategy, having the right tools also from a banking perspective to protect yourself. This is why I'm here, is to making sure like you have a safe journey in working, first in building the right contacts on the ground, understanding the culture, the sensitivities, and also finding a way to work on a compliant way with the world of today. And I haven't mentioned earlier, and I will leave that for the Q&A, also about our view as a bank from a sustainability point of view, because it's quite important. Libya is included there. Talking about sustainability for Bank KBC, they are supporting the oil and gas industries from a commercial point of view, but we give a priority to those industries that also walk into the pathway of sustainability, gas reduction, and so on and so forth, in order to achieve the sustainability objectives, be it with the bank, be it with Libya, and also have to mention that we take pride also to share the knowledge and understanding and the policies in general. We have this dialogue internally in Libya, and hopefully we can be a part of the journey, but this is not one way go. We need to see the players and the actors here to give that priority, and I think this is going to be a very exciting journey for everyone. Thank you very much.
Thank you for the point. Interestingly, Ghassan, I was in Bahrain a couple of weeks ago talking to some people that are doing a sustainability forum, and the Bank ABC's name came up. You're obviously heavily involved in that, so it sits nicely. So you're well known around the world there. Before we conclude on this question, I wanted to give Peter a viewpoint. I'm sure, Peter, it's a question that you're asked a lot as well about what is the one must know before they entering the market, and I'm sure with your various trade missions. So in addition to what we've heard from the gentleman, what would you add to that?
Of course, my first point would be join the LBBC, and we can help our members. But I think in addition to the very important points that others have made, I would just say patience. Part of that is understanding the culture, and it's not unique to Libya. But going there, certainly, making the contacts, but having the patience to build trust with local partners, with the economic institutions, with the NOC, and taking time to do that.
I think an extremely valid point. And let me build on this for our next question when you say not unique to Libya. So our next question, I would say, is not unique to Libya, but I will ask it on behalf of the individual that's put it in. They are already, it's a company that's doing a bit of work in Libya already with a company here, but they are hitting a bit of an obstacle in coming to an agreeable arrangement in terms of payment terms. So I open this out. Are there any suggestions, without knowing the ins and outs, which we don't have here, about how this could potentially be mitigated or how you would help the said company?
Would you like to answer the question first?
I will open it out to whoever here feels most confident and experienced to do so.
Yeah, I'm happy to dive in.
Oh, okay, go.
Yeah, I mean, as I mentioned earlier, I mean, it's very important to do your homework and to assess the risk very carefully, including the contractual obligations, the payment terms. I've seen many examples of open terms payment, open account payment solutions that will allude to your decision, how you're happy to take a risk from that perspective, and how you are able to have long receivable days vis-a-vis short periods in order to support your working capital. This is where banks step in to help your working capital solutions in higher than normal risk markets. This is a niche we all specialize in relation to Libya, to find solutions, and that in order to serve your business there. If you don't do your homework correctly, if you see a lot of opportunities, and obviously Libya, it goes without saying, the opportunities are huge for a country with proven reserves that are considered the largest in Africa. Looking at it from a convenient point of view, being like probably the terminals in Melita closer to Sicily from Milan to Sicily itself. So there are a lot of attractive, it matters on the details. Please speak with the trusted partner, work with them, make sure like all the risk elements are clearly defined and you have a mitigant strategy. And when it comes to the payment, and that's from a contractual point of view, just making sure you are navigating the right way. And obviously you need to have the right legal partners locally and internationally. And also from the other side, make sure like you have the right partner who understands the market and he knows how to protect you, and also to be adamant and clear with you to say what they can do and also what they cannot do. So we are not doing all the solutions for a country like Libya. Depends on the risk and where they are and all of that. And we have that clear strategy. If something we cannot do it, we'll say it right front. So we are not time wasters here. Thank you.
Thank you, Ghassan. We've got quite a few questions that I want to try and get through all of them. But before I do, does anyone quickly want to add anything, 30 seconds to what Ghassan said, or are you happy for me to move on?
To help the business out, I think it's worthwhile since these guys are operating in Libya. I'll try and do it as short as possible. Look, as someone, whether it's a tender or a request for quotation in terms of your Libyan clients, these are, you have to remember, state-owned companies. So a lot of the times they have to abide by their own local regulations. The question for this particular gentleman is we can say that we work with international companies when we feel that the opportunity requires local input where we leverage the risk because we're able to, one, cover maybe the project in terms of capital, to also assist in terms of negotiations and so on. You can then decide on how much risk you allocate to your final commercial bid to adjust whether to take, as Ghassan said, the open payment terms or to ask for letters of credit. But ultimately, yes, you have to know who your customer is and what their payment methods are. But there are tools at their disposal in terms of how they can negotiate. And as Peter also mentioned, there's the point of patience when it comes to Libya.
Thank you. We'll move on to our next question. ICV, in-country value. Are there any plans to introduce this into local content within the oil and gas supply chain or the energy supply chain wider? We'd obviously seen that, particularly across other parts of the Middle East and the GCC. You have similar things in the UAE, in Oman, IKTVA program in Saudi Arabia. Is there any plans to introduce something that you're aware of into Libya?
Can you elaborate a little bit more on the question, and we can try to kind of
so the question is around ICV, in-country value, where a certain percentage of the money or goods need to be fabricated or made within Libya itself. So you will see across in the UAE, they have a large in-country value program where they're encouraging more things to be made, localization of the workforce as well. Is there any plans for that, or is that already underway within Libya?
It's already existed. So we've had joint venture activities with international companies whereby under the investment law, which is recently updated, obviously, where preference actually when it comes to tenders and projects, if there is a viable joint venture. So if you have a service workshop, for example, that you've established where you're maintaining assets that are based in Libya, by obviously meeting and sitting down with the NOC and also even the ministry and certain municipalities, depending where they are. Those companies usually have first priority when it comes to actually doing business, because, as you said, it's a driver for the local economy and the encouragement of foreign investment. So we've had experience in doing that in the past, and if I'm honest, if you're speaking with the right people, then there are usually directives to generate more business and opportunities when you've made that investment. but it's
is there an
something
official government initiative in place yet, Ehab, for ICV, or it's not been
not an official
formalised yet?
one. It's certainly something that's been mentioned a number of times before, but I can't say that there's an official initiative, or that's something that probably will need to be looked into.
Okay, so watch this space. I'll bring our next question. There's actually been two questions, so I'm going to try and combine them around this. The comments about the country being split into east and west. How does an investor or an organisation looking to go into country know that the legal agreement will remain valid in the long term? Ghassan, I see you're nodding your head, so I'm going to go to you straight off on this one.
I respect the question, but this is where I requested to do your homework first, including understanding the political landscape. Luckily enough, NOC is still one authority that is a political organization where they are covering the whole market. So it depends on which industry you're working. If we're talking about this area, energy in general, luckily enough, all these organizations that probably have a contractual obligations, and all these payments are going through very direct regulated entities that will save you from this political track of east and west. If we're talking about this specific industries, which gives us a lot of comfort ourselves to get engaged with. If we're talking about different contractual obligations with certain local authorities, that's, I think, is beyond our scope of work where we're talking here. So if we can have giving a bit of clarity in this question, then maybe we can have more of a substance, but definitely in relation to oil and gas, electrical project, and renewables, I think it's already politics-proof transactions as of today.
Thank you, Ghassan. We've got 5 minutes left and the questions are still continuing to come in, so we'll try and do these as quickly as we can so we can cover them all. A question coming in commenting about some of the projects being delayed in previous years, and do we see that type of landscape improving now in the future? Again, maybe go with yourself, Mohammed, on this one first, and then see if anyone else would like to jump in.
I'm sorry, can you repeat? Some of the project has been delayed?
Delayed, yeah. So in the past, some of the projects have been delayed, and do we see this now improving in the near term?
Well, I think as you saw in the time frame of the round table, the bid round itself, there has been a delay of 3 months. I think this timing issue of project will remain at least for the near future, but you know, it's predictable. You can plan on it. It's not like open-ended extensions and amendments. But things are definitely better than, I would say, for the past 3 years or 4 years, even with the ongoing political struggle between the East and West. Business-wise, things has improved.
Mohammed, would anyone like to add to Mohammed's points there?
Yeah, I'll jump in. I think there's something that's obviously attributable to Libya in terms of its specific dynamics, but we have to remember in the oil and gas sector, and Ryan, you're someone that covers the MENA area. There's other countries in the GCC area as well that have usually delays when oil production prices drop, impacted investments coming through even from IOCs, and Libya is no different to that, obviously, with the bureaucracy, but actually because the NOC has remained first and foremost an independent institution and there's been limited political intervention. Again, if you know the customer and you know you have depth and knowledge about the project and how it came about, whether it's pre-feed, feed, execution, you'll actually be able to kind of understand when's the right time for you to engage in Libya if you're transactional. If you're from a service point of view, or you're actually a large contractor taking part, you've probably already studied and looked at how to mitigate that risk So that's my answer to it. I don't think Libya is any different to the Nigerian market or into any of the other major African oil producers.
Yeah, I think you had it. I think Peter mentioned earlier when he'd said it's not unique to Libya, and I could say that for a lot of these, that even within the GCC, you know, the big oil producing nations, you're still witnessing project delays there, and we're getting that because there's a use that it's going to be boom time all the time, and that's just not the case. I'm going to take us now to our last question. I think this probably sets up for you, Ghassan, which is nice as our partner for here. The question is, what challenges do you anticipate for project financing and payments to international suppliers? And again, any strategies that you would look to mitigate that?
Excellent question. I like it. But also, before answering that question, I wanted to add I was thinking more about the political drag in relation to NOC, which is not direct. But this is also a call to the policymakers in Libya and authorities to set the priorities right. As of today, what NOC suffers, and I think this is not a secret, is a shortage of funding, not because of the lack of funds, but because there's a political drag between East and West, where the East is the House of Representatives and the West the executive power. And as a result, the budget for this year hasn't been executed, and that has impacted the oil sector. What I'm calling all parties to leave funding of the capital projects, the annual CapEx programs, intact regardless, because this is the livelihood of the country. And I hope will be reaching the right people to have this ahead of them. Also, there should be some sort of quotas from the Central Bank of Libya, and I'm talking from a capacity point of view, to give a priority to those transactions related to capital goods investments, including generators, turbines, and all the equipment related to that sector as a top priority vis-a-vis the consumables as short-lived products. We don't have infinite pool of funds to achieve that, but giving the right priorities is what will generate more funds for the country in order to achieve the target of 202 million barrels per day. That's just a side comment. I wanted to start my point, and this is also relevant to this very good question that I received, which is said, Libya's foreign currency shortages and UN-related restrictions. What challenges do you anticipate for project financing and payments to international suppliers? What strategies are being considered to mitigate these risks? First of all, talking about a project financing point of view in oil and gas industry in general, my understanding that many of these international oil companies, when they participate in major projects, usually they work under the general working revolving facilities where there are multiple multilateral banks are involved, the rest of it. That's not really relevant. But we're talking about a sector of smaller companies where they don't have this privilege or access, and they want to invest in Libya. It's a bit of a different game changer, and this is relevant to how you approach the right banking sector in order to work with you on the solutions. I don't think there are any specific solutions for long-term funding in the country as of today. But for any new entrant, obviously the best step is to start small and then to grow depending on how your experience, your resilience in the country. I don't see any UN-related restrictions for that sector. All the legacy sanctions, if we call it, or what we call asset free, are standing from 2000 at the request of the Libyan government until we have an elected government or elected authority place, which is still a transitional period. So that's a selective sanctions in order to protect the funds of the Libyan people. But I'm not aware of any restriction to that point of view in relation to the oil and gas. These are well-regulated sectors. Banking sectors are also revolving, but it's all about the risk taking here. How are you going to take the risk? what sort of risk tolerance that can be acceptable and what is not. And I hope I have answered these questions.
You certainly have, and you've managed to do that nicely, just to round us up on time. So thank you, everyone, for joining us. You can tell that it stirred up some emotions here because the amount of questions that came in, particularly towards the end. So thank you. Thank you to Bank ABC for partnering with us in this, and Ghassan and the team. I think the comment was made about if anyone wants to keep in touch. All our panelists, I'm sure, are happy to help out there. So get in touch with myself or any of the EIC team and we can put you in touch there. But I'd like to thank everyone for joining, for the questions. To Aisha, fantastic first presentation. Aisha, you can go away very proud of yourself today, and I look forward to your second and third and fourth presentations as well. To Ehab, to Mohammed, to Ghassan and to Peter, thank you so much for giving your expertise with us today and sharing your insights. I hope you found it of interest to everyone. The team will follow up. They will give you a copy of the slides afterwards, and they will also let you know about further events that we have coming up from an EIC perspective. It's just left for me to thank everyone. Enjoy the rest of your day and the weekend when it arrives. Thank you very much.
Thank you. Thank you. Bye-bye.
Thank you. Take care.
Thank you.